So we're going to talk about credit today and how to build credit or how to fix anything that is related to your credit. So just a couple of things with the terminology. Obviously, a credit is offered to a borrower, to the person who's seeking credit by the lender or the creditor. And your credit worthiness is the degree that you're managing your financial obligations. So your credit worthiness is important when you're applying for certain loans, such as auto loan, mortgage. Not as important when it comes to the federal loans, because the unsubsidized loan that you guys are borrowing does not require a credit check. However, the Graduate Plus loan does require a credit check, but it is based on credit readiness as opposed to credit worthiness. Credit readiness means if you don't have anything negative in your credit, then it's fine. So on the basis of you don't have anything negative in your credit, you are allowed to get the Graduate Plus loan, even though there's a credit check. But credit worthiness is basically wanting you to have a better credit and you be able to be a credit worthy borrower. So that's why most of the private student loans look at credit worthiness. It's not as simple as the Graduate Plus loan borrowing. So credit report will have all of your credit history. So some of you may not have enough credit history yet. You're just starting your, building your credit. You're in your young adult age. Maybe there was no reason for you to obtain any credit or make payments on anything. That is why you may not be at the credit worthy level yet, not because there's anything negative in your credit, but because you don't have enough borrowing history. But as you move on with your life and as you have new accounts, as you borrow more and pay more, all of these things will be reported in your credit report. So if anybody is interested, when did this credit reporting start? It actually started in 1950s and 60s when the banks started sharing information about consumer data. And then it wasn't very organized. So in the 1970s, these corporations emerged, the three major corporations, Experian, TransUnion, and Equifax. So it became more structured. And because these corporations were collecting personal data, then in 1970, Congress passed the Fair Credit Reporting Act on how to regulate information sharing. Which was a good thing. So basically the way it is right now kind of started in the 1980s as it is today in a more structured format. So why is credit important? Credit is important because AAMC did a webinar on this credit last week or 10 days ago, I think. So this data is from there. The credit is important because it may cost you $500,000 more over your lifetime when you're applying for different kinds of credit. If you are a credit-worthy borrower, the lenders will offer you much cheaper interest rates on what you're borrowing. And obviously, this is not true for federal student loans because federal student loans have fixed and set interest rates. So unfortunately, whether you have good credit or okay credit, there's nothing you can do about the interest rate on your student loans. But when it comes to other things such as mortgage, your auto loan, your credit cards, and even home insurance or auto insurance and any other type of loans, you may get cheaper interest rates because you have good credit. And if you don't, you may be borrowing at higher costs, which is the interest rate, obviously, and it may cost you $500,000 over your lifetime. So when you talk about credit, you have to talk about the credit score. Basically, it's a number between 300 and 850. So basically, it's a statistical number that evaluates consumers' actions. How you have been handling your credit over time basically forms your credit score. And 640 is kind of baseline. It's considered borrowers who have below 640 credit score are considered subprime borrowers. And so anything below 640, you may get higher interest rates. And if it's better than 640, then you may have a little bit of a cheaper interest rate. But if you're seeking what's a good credit score, I would say anything around 700 or above would be considered a good credit score. So this, the most common used credit score is the FICO score. It's created by the Fair Isaac Corporation. So I think that this is the last names of the two people. I think one was a mathematician and one was a statistician, and they looked at the borrowing behaviors of consumers, and they came up with this FICO score. I mean, the credit score, there are so many other credit scores that you may hear, Vantage score and so many others. If you just Google it, there are so many other scores, but the most common one that the creditors go by is this FICO score. So that's why it's most commonly used. And this gives you the range of what is considered excellent, good, fair, poor. Chelsea can forward this presentation to you at the end of the presentation, and you can have all of this. So anything like I said, above 700 would be good. So if you can do 750, it would be excellent. And I would try not to go below that 640 number. Even 640 is not good, but if you're just starting to build your credit, it is what it is. You will need some time and length of borrowing to build your credit and bring it up. So what doesn't affect your FICO score? Anything that's, you know, personal or biographical information such as age, race, religion, gender, employment status, your income, net worth, marital status, where you live, level of education, or any of your personal characteristics have no correlation to your FICO score. What is in your FICO score? These are the 5 top, things that they look at: your payment history, length of history, types of credit, amount owed, and new credit. So payment history is big. Are you paying on time? And also how much are you paying? If you're just paying the minimum on your credit cards, then you will most likely take way longer to pay it off, and you will cost yourself a lot of interest. Amount owed is 30%. The suggestion is to keep your credit card balances at the 25 to 30% level. So if you have a card, let's say with $1,000, balance that you can use. So the suggestion is to keep the balance $300 or less if you don't want the amount owed to affect your credit. If you are constantly relying on credit cards and using a lot of credit, and if you're borrowing up to the max all the time and maybe only making the minimum payment, that means you're heavily relying on credit, and that will have a negative impact on your credit. So the length of history is obviously important for them. It's about 15%. Again, if you just started borrowing, if you just obtained, I don't know if anybody has a auto loan or any other type of loan other than the credit card. But the length of history comes obviously with your age. If you have been borrowing for a long time, you will build a longer credit history, or if you just started, it's not gonna have so much positive impact yet because of the number of the years that you're borrowing is less. New credit, if you're constantly applying for new credit, and obviously if you get denied of credit and you constantly continue applying for credit, I would say do not apply for credit, because obviously if you get denied of credit, maybe you don't have enough, maybe it's not negative, but you don't have enough credit history. You're not credit worthy for that lender yet, that they're not allowing you to borrow new credit. And by applying multiple times with other creditors, now your credit score is going down because you're constantly seeking credit. So if you get denied, number one, you have a right to know why you got denied, and you have a right to get your free credit history, so you can check with them why you were denied. And most of the time in your age group, it will probably say not enough credit history. So that could be the reason that why you may be denied if you're denied. What information is on your credit report? So any inquiry that you're making will be on your credit report. Any open loan or revolving loan. Revolving loan is obviously the loans that you can draw, maybe without putting a new application. The accounts that you have closed, any account if it's in collections, or also they report anytime you pay late. Anything you pay late that's 30 days or more is considered late payment, and it will be on your credit report, and it will negatively affect your credit. Any public records, and you may not have this problem yet, but God forbid if in the future you have a house and you have your mortgage, and for some reason, I doubt that it will happen to any health professional student or graduate, because health professions usually have secure careers, but God forbid if you bought a house, you have a mortgage, and you couldn't pay your mortgage, and now there's a lien on your house, that will be reported. Any lien that you have on anything will be reported. That's called the public record. And the comments, some creditors may have comments on your credit report in your credit history, or you may put a comment yourself. Let's say you found an account that's wrong, you never borrowed from that lender, and now that lender is showing you in, creating problem for negative effect on your credit, because they're reporting that you have this account and you never made a payment on it, but you actually never borrowed from them. You can make a comment that this is wrong and you are working on fixing the problem, so the other creditors can see it in your credit report. How to repair your own credit. The best way to repair your own credit, unless you're a person who has identity theft, who's a victim of identity theft, the best way to improve your credit is obviously pay your bills on time, pay down on your debt, and limit applying for credit. So if you don't have sufficient credit history, or you have borrowed up to the maximum on every credit that you have, so the best way to improve the score is obviously to pay down on your debt. So if you pay down on your debt and then pay on time, so I doubt that you have paying late kind of problem, but if you, for some reason you were paying late, and if you start paying on time, or even call the creditors, that it was a mistake, you didn't mean to pay late, but you didn't realize, maybe they can work out with you to improve that late payment on your credit. How do you track your own credit? Annualcreditreport.com is a very good website, and you can get your credit score from 3 different major credit bureaus. So Experian, Equifax, and TransUnion are the most commonly used credit bureaus. And it's usually best to get your credit report from the 3 of them, because most likely they will show the same accounts, but sometimes the way they're calculating your credit score is different. So I always get my score from 3 of them, and I see different numbers. So your creditor may be using, maybe you're applying for an auto loan and they are using TransUnion rather than Equifax and Experian. So you will know why one is different than the other. There are 3 other websites that I provided. I believe myfico.com could be with a fee. It gives you with other services as well, like credit protection or credit alerts. I checked this yesterday, and it's asking different services, and it comes with a fee. But the other 2 does come free. So, but I personally go to annualcreditreport.com to check my credit and my credit score. So if you're worried about identity theft or other people using your credit, you can put a monthly, you can select a monthly credit monitoring service. All of these 3 credit bureaus provide that. Of course, it comes with a fee. Your bank could be providing this kind of service as well. So if you have a relationship with the bank, and because you're a customer with them, maybe they will have some type of credit monitoring service for free because you are a customer. So if there's ever a dispute on your credit, how to fix this is basically you need to initiate first an online application to dispute any errors that you may have on your credit. If you see multiple things, maybe it's best to tackle them once at a time, and then definitely I tell this to the students when it comes to student loans. any communication, any paperwork that you have with your student loans. Now I know everything is electronic and a lot of things are online, but you can maybe have an online folder that you keep your things in. So I would keep any kind of communication, the dates, the times that you spoke with people when you're working on, you know, disputing anything you have, so you can have a history of what you have done. It's estimated that recovering from identity theft takes about 6 months, almost 200 hours of your personal time to dispute and recover from this. And if you suspect that there's fraud, somebody is using your account or your social, definitely file a report with the police, contact the police so they can have an official record of your dispute. Take control of your credit card. So if you're only paying the minimum, sorry for the shifted slide again, my iPad does that. So if you are only paying the minimum payment on your credit card, that means you're not managing your finances well. So the signs that you could be in trouble, if you're heavily relying on credit, or you are paying even the necessities like food, the utilities, the basics with your credit card because you couldn't manage your finances well and you don't have enough cash to pay them, you know, cash, so you're charging everything. Or you're constantly transferring your credit card balances from one credit card to another because now the new credit card offers you a cheaper interest rate, or sometimes they have introductory 0%, let's say for 6 months or 1 year. So let's say you have a credit card with 10% interest rate. So now there's this new card that's offering you 0% for 1 year. So it makes sense to transfer that to the other card. Hopefully there's no processing fee, because if there's a processing fee, that's a cost to you as well. So then you transfer it to the new card, and it only works if you are disciplined enough to pay off the existing credit card balance with the 0% within the time frame that you have. So if you're going to transfer the balance to the new card, and then the balance is not paid in full by the time 0% is no longer available, and then you also built new balance in the other card, then you're obviously doing something wrong. So it is smart if you're going to take advantage of the introductory 0%, hopefully with no fees, but it is not smart if you're constantly creating new debt for yourself. If you're asking for increase on credit limits, now increasing your credit limit can work to your benefit if you're going to increase your credit limit but not actually use it, because then it will lower the amount owed on the credit card, right? So if you owe $300 on a $1,000 credit card and you get an increase to $1,500, so the percentage of money that you're owing on that credit card will go down. So it will actually improve your credit. But if you're increasing your limit with the intention of borrowing more, and you actually borrow even more, now your $300 balance went to $1,500 because you got a credit limit increase, that will have a negative impact on your credit. So you're doing a disservice to yourself. If you don't have any cushion for unexpected expenses in your budget, that is also a sign that you may not be doing so well financially. And definitely making only minimum payments will cost you so much money over the long run. Many years ago, I think because everybody was struggling with debt, so there was a law that came into effect that now all your credit card statements shows, if you only pay the minimum payment, how much it will cost you additional to pay over time. So it gives you extremely a different amount if you only make the minimum payment and how long it takes you to pay off on that card. So that's like alarming when you look at it. So it's advised that, you know, to pay definitely more than the minimum. But you can see that if you have a credit card, you can see that in your statement and pay more than the minimum. Obviously, I doubt that anybody will be ignoring their credit card statements, but if you don't make payments or make payments late, it will adversely affect your credit. And definitely do not max out on all of your credit cards. So fixing the problem, I would say for students, definitely set up a budget. When you have the presentation, this is a link for a budget worksheet, so you can create on your own budget, or it could be as simple as working with an Excel spreadsheet. You know, Over the years, I have sat with many medical students who came to my office, and we sat down and we created on an Excel spreadsheet their academic budget for the year for fall and spring. You can do that yourself on an Excel spreadsheet and see if you're the kind of person who needs to pay more than the minimum on your credit card, but currently you can't afford to do so. You can see what expenses you can cut down and maybe create some additional funds for you to make additional payments on the credit card. You really do not need multiple cards to build your credit. I would get either 1 or 2 cards. That has the best benefits. So having 10 cards or having 2 good cards doesn't make a difference. I would actually not want having so many different cards. Pay attention to the store cards, because store cards usually have higher interest rates. So you may get better interest with if you are a member of maybe a local credit union, or if the bank that your parents work with and now you're working with them as well as a customer, maybe they offer a better credit card with better interest. So I would check those before trying to build your credit with a store card. Store cards could be as high as 25 to 30%. So definitely check your credit score. Now that you know annualcreditreport.com, check your credit score, make a habit of checking your credit score and credit history every year, and contact the creditors if you're having any difficulty with your payments. I doubt that it's happening with you guys, but if anybody is having difficulty, you can definitely contact the lender and definitely check on that late payment reporting, or if for some reason you're experiencing any kind of financial difficulty, see that what they can offer you. Maybe they'll just let you pay even less than the minimum payment for a while. I know so many creditors are working with the borrowers right now because of the COVID-19 related issues. God forbid if somebody lost their job, so on and so forth. But it may not really apply to this group yet. So identity theft is big. Anybody could be open to identity theft. Equifax had a credit breach. It affected almost 150 million people in the United States. But this is one of the reasons why schools stopped using social security numbers as your ID number many years ago, because of the identity theft. So you all have student ID numbers rather than social security numbers that we're using as your ID numbers. So if anybody contacts you from the university asking your social security number, definitely it's somebody trying to get your information, because schools will never call you and ask your social security number on the phone. So do not provide that information. And I would not provide that information to anyone who's calling you by phone and asking your social and any other information that you should not provide on the phone. There are ways of protecting yourself. I don't know if anybody will be on active duty, but if anybody is going to be on active duty in the future, you can put an alert, or you can put a credit freeze. So if you feel somebody is using your credit and you couldn't resolve the situation yet, and you're so worried that they will have more negative impact on your credit, you can put a credit freeze on your credit, and every time there's an inquiry on your credit, you will be notified, and without your permission, that credit application will not go through. Again, storing and organizing your financial documents safely is a good thing, and that goes for anything that's related to student loans as well. Definitely protect your personal information, as I mentioned before. And some companies such as Experian, Equifax, TransUnion, all of these companies also have identity protection services. If you want to purchase a service, you can do so, but it comes with a fee with them. So the impact of student loans on your credit, they are reported on your credit. When you're in school, you all are in school deferred. So you're in good standing. As long as you're enrolled for at least half time, you're fine. We're reporting you in school. You're not required to make any payments. You're in good standing with your student loans. But when you're in repayment, and again, health profession students are the least worried, because you guys all have good careers, good earning potential. Usually this will never happen for you. But when you're in repayment, most of the time, health profession students may not make payments because they forgot maybe a small amount of loan sitting somewhere that you didn't think you borrowed many years ago, maybe when you were undergraduate. So that is why when our students graduate, we provide either the loan history, physical document, or we tell them how to retrieve it so they don't miss any of their student accounts. So if for any reason you feel that when you graduate and after you use your grace period, you're not able to make a payment, then there's something called forbearance. You can file for forbearance on your loans and it will not negatively impact your credit. Forbearance is a temporary delay on your payments without messing up your credit. So there's really no reason for you ever to ignore your student loan repayment or any notification you get from the servicer regarding your repayment. There are so many benefits for you as borrowers that you can benefit from, even if you feel like you're not in any situation to be able to make a payment. I know, and we will talk about this in the exit counseling with medical students. There are so many ways that you can manage your student loan debt when you graduate, that you will have smaller payments which you can afford during residency, and you can increase the payments once you become an attending. So we talk all about that. If there's anyone who's in a different health profession, you can ask the financial aid counselor in your school to give you an exit counseling session. I know dental does that, medicine does that, and you can definitely ask if you're in a different program to the financial aid counselor to do that for you. Again, this is hardly a group that's gonna suffer through these things, but if a student loan payment is not received by the government, eventually they will garnish your wages. If it still continues and they cannot collect student loan debt, they can revoke your license as well. And even if you file for bankruptcy, you may still be responsible to pay back your student loan debt. The FICO announced that FICO scores are possible even with high student loan debt. So especially in health professions, graduating with high student loan debt is a fact. It happens, especially if you're an out-of-state resident, so you pay a little bit higher tuition. Student loans are treated as installment loans. Whether you're in deferred status or not deferred in repayment, it doesn't have an impact on your credit. But the credit card performance has a stronger correlation with the borrower's performance. So this is what FICO said. Bankruptcy, very briefly, there are two types of bankruptcy. I doubt that, again, then this will be an issue for you. But if ever you have to file for bankruptcy, Chapter 13 is basically reorganization of your debt. It kind of tries to give you a schedule that's more affordable to pay your existing debt, but it's really not a discharge of your debt. It stays in your credit for 7 years. Chapter 7 is straight bankruptcy or liquidation. Even with Chapter 7, it's very hard to file for bankruptcy or have your student loans discharged. And this one stays in your history for 10 years. So I already mentioned about the credit bureau, so I'll skip this one. If you just want step-by-step, what should I do to fix or improve your credit? I gave you the steps. I'm not gonna read all of them, but just the highlights. So basically analyze your credit reports, pull your credit report with all these three agencies so that you can see what each one is reporting. Any errors, fix the errors to protect your credit. There are programs out there to protect your credit, so such as identity theft insurance, but it may come with a fee. Fix late payments, and I spelled out what you can do with your late payments. And become an authorized user. This is for people who don't have enough sufficient credit yet. So you can become an authorized user through your parents. Sometimes when you're borrowing, I mean, we don't recommend borrowing private loans, but if there was a student who wants to borrow a private loan who doesn't have enough borrowing history or good credit, we would maybe suggest the student to use the parents as co-signer so then they can get a better credit interest rate, because of the parents' credit worthiness. But if you don't have enough credit and you want to get going with this and your parents have good credit, you can become an authorized user on them and then start building your credit. Request a credit limit increase. Again, the suggestion is to request a credit limit increase, not with the intention to spend it, but to lower the amount borrowed, the percentage of amount borrowed. And then pay down on your credit balances is the best thing you can do to improve your credit. So those are the highlights that I wanted to mention. And I want to thank you for your time. I have a quiz that I prepared. Chelsea can email you, and you can try to do it on your own and see if you're able to answer the quiz questions. Thank you.